let's just say I got down. Oh man, here we go with this. All right, here we go. Because you got to remember, the lower you go in time, the lower you go time frame wise, the more you're going to see, support, resistance, retest. All right. So these are marked up on the 15, correct?
Mm-hmm.
Let's just say I got in down here, right here. Well, I know this was a previous high on the 15. Even though I have my weekly marked up, I know between this zone right here, that's my TP. My TP is sitting. Let me pips that. It's still 87 pips.
Okay.
So you know when you're marking up from the higher time frames, you're trying to get the overall picture of your chart or your what the market is doing.
Mm-hmm.
As you go down to each lower time frame, now you're marking up zones and areas of interest to buy or sell to. So the lower you go, just like I said, I'm only entering on the 5. Well, I know this area right here was a previous high. I know this was, although this isn't correctly on it, but I know this area right here was a previous low.
Okay.
Well, guess what? I'm buying back up to the previous high within the zone. Yeah, I'm on the 5 and I might have marked it up on the 15. Boom. And honestly, right after that, boom, it hit my weekly high. But you know you're in bullish, so you know what you're looking for. It's just when you're trying to get confirmation between different time frames, the main thing that I found when I'm marking up a chart is, like I said, higher time frames, I'm getting the overall picture. I'm trying to see what the market has been doing, what the market is doing, and which way or direction the market can go from that point. As I'm scaling down to my lower time frames, of course, your higher time frames are still going to be marked on there, which is why we had told you guys to mark up in different colors.
Mm-hmm.
So you know, okay, let's just say I got white for weekly, orange for daily, and green for so forth, so forth. So I know once I'm scaling down to the lower time frames, if this was let's just make it red. Let's do that. If you listen, click on it. All right. So let's make this red. Let's just say this right here was the 30-minute.
Okay.
And then we'll say the orange was the 15-minute. Okay. So orange 15, that's the 30-minute. As I scale down, I get ready to enter. Well, I know this is my 30-minute mark still.
Okay.
But I know within that time frame, this is still my 15. I still scale this on my 15. So that's gonna be my first TP. Although, like I said, that's not accurate, bro. So don't take that to heart. But that's gonna be my first TP. Well, I know this was a high on my 30. Okay, well, we're retracing back. Well, not retracing back up, but we're starting to get our bullish movement back because this is basically a retracement. All right. Now I'm buying to that previous high. If you, like I said, if you're good, like Mello is, bro, that he on a whole nother level of holding trades. You probably would have put another position in here and bought up to the weekly high.
Mm-hmm.
Once it came up to the weekly high, bro, it never broke it. So guess what? It hit my 30 again.
Now, right there with the 30, you like, I don't want to drag this question out too long and take from everybody else, but right there with where it hit that 30, like you would either look for price to either continue down or it could bounce off that and go back up to the weekly high, correct?
Yeah, it could retest that weekly high, but this is 5 minutes. So that's another thing, bro. You can't get your confirmations from the 5 minute chart. Because 5 minute, what's on the 5 minute, if I go to the 15, all that movement you seen on the 5 minute, up and down, the bullish and bearish,
right?
Look what it is. One bearish movement.
Okay.
We're still in the downtrend. Even over here, dog, it still hasn't broke no type of resistance. Still in the downtrend.
Gotcha.
So there wouldn't be no point in buying back up I mean, unless you're swing trading.
Yeah.
But otherwise, bro, I'm looking for a sell.
Gotcha.
So it's just you got to be aware of different. You got to be aware of price on different time frames, bro. Once you can get that down and identify where price is on multiple time frames, it really doesn't matter what time frame you enter on. Heck, you can enter on a 4-hour time frame and hold that jump for a week. From what you know from the weekly and the monthly. Gotcha. I'm not skilled like that, but I mean, I'm just putting it out there. One thing I did learn was learning what price action is and learning how to correlate it to multiple time frames. Basically, knowing where you are in the market on any time frame that you're looking at.
Okay.
So with that though, is it best to get your confirmation on the 15 though?
No. You want your confirmation time frames, bro. If you're not doing like the week holds and stuff like that, of course, I'm starting off on the weekly because I want to see what the week has been doing. Then I'm going down to the daily. So if my weekly is in bearish and I go down to my daily is confirming what my weekly was saying. Yeah, we're in bearish. Okay. Then I'm scaling. Now I'm finding my highs and lows for those dailies. That's first and foremost. What the highest point, what the highest was, what the lowest was. Once I find those, I'm going down to my H4 and H1. That's what I was taught for getting not market structure, more for what the trend is doing. If your trend on your H4 or your 4-hour and your 1 hour is pretty much backing up what your daily and your weekly saying, that's your confirmation right there. When you're getting down to your lower time frames, bro, that should be what you're looking for. If you've been in the bullish the whole week, if you've been in the bullish for the past couple of days, once I scale down to my 4-hour and my 1 hour, guess what I'm looking for? Buys. That's what we in buys, especially on the 4-hour, because that's gonna show what momentum has really been doing between that day. If that day starting off and it's already a bullish candle, and on the 4 hours it's showing bullish candle, bullish candle, bullish candle. You know, one thing you know is a retracement's coming. So if you're not at that lowest low for that daily, then you might want to wait till that retracement comes before you hop in on it. Otherwise, that's when you start to lose money just impulsively hopping in. Same thing with selling. So you want to use your higher time frames for your market confirmation. You got to remember, the higher, the clearer the picture. The lower, all of this right here, man, on this 15, if I went up to the hour, you see that? You don't see none of that, dog. All of that. That's your 15 right there. The higher I go, watch this, 4-hour. Less and less.
Gotcha. Less
and less. So you want to get your confirmations on a higher time frame. I really have to get off this account. You want to get your confirmations on a higher time frame, and then that's when you work down to your lower time frames and your entries, and you're looking for your engulfings, and you just want to make sure it correlates or matches whatever your higher time frame was saying. So if you like I said, if you're in bullish on your higher, or if you're in bearish on your higher, when you get down to your lower time frame, well, the momentum's been going bearish, so I probably shouldn't be looking for a buy. I should be looking for a sell setup. If you're at the highest point, I mean that's like up here. You see how this came up? This over here came up to try to test this previous high.
Yeah.
Now we on the daily, so that means from what day is that? The 13th to 20th. It's all been bearish. If you would have caught this up here, man, and just rode that out 7 days, you're cold, but you still would have been right once you got to your lower time frame, because okay, this is wicking up here, exhaustion. Once I go down to my lower time frames, I'm looking for those candles to enter on, those engulfings to enter on, and boom, it's just a hold. And the way this is looking, that's a retracement.
So like when you right there, like where you say like it reached this high and I guess it starts selling off. You see how it pulled back up though? Will I wait? I mean, should I just wait or just because I be having an issue where like I think I'll be getting in trouble when I start retracing, I guess. Or when it's consolidating, I start kind of like pulling out too early.
Well, you never want to enter when it's consolidating.
Okay.
Your money's just sitting right there. So you got to remember, most move, or pretty much the market moves off of a consolidation point. So let me see if I can find one for you. We're on a daily. Let me go down real quick. Go to the hour. All right. So you see this area right here?
Yeah.
Before it made an actual move in any direction, just up, down, up, down. That's all your money is doing. Up, down, up, down, up, down. Let's just say you seen this candle right here, right? And then it go, and you're like, okay, I'm finna get in on the buy. It's finna shoot up. Broke that zone, shot straight down. You see what it's doing now? Coming back up to take all this money that was sitting. All this finna get taken. So consolidation is a no-no. You never want to enter in consolidation, bro. Your money, if you enter in the wrong way, your money will get taken. And you be over there looking like Drake. So yeah, I had to learn that lesson the hard way.
Did you say like Drake?
Yeah, like Drake.
Man, bro, relax, bro.
Yeah, he slid that in real smooth.
Not on my channel. Come on, man. It's OVO, man.
Great.
I'm just messing with you, dog. Messing with you, AJ. I had to. But yeah, man. You want to wait till that consolidation period is over. The best thing I found to do with that is to draw. So this is the high. This is the low it got. Until this zone breaks, bro. Either up or down. I'm not entering, dog.
Gotcha.
Until this zone right here breaks, I'm not entering in that trade. Like that, that's over with. Man, you'd be amazed at how many times I enter in the trade from here. I mean, if you enter here from here, you kind of good, but it's definitely finna come back up and retrace. But thinking this was gonna go by, enter in and then just do this. And you're sitting in there for hours and like, all right, and then boom, you come back and check and you're negative or you're in the red. I'm like, what happened? Well, you entered in consolidation. So, I mean, you got to know it's a lot of money sitting right here. So what the markets is going to do, they're going to hit you with that, what's the word I'm looking for? That fake out.
Okay.
Fake out. Get you going one way. You know how many people probably got in right on the sale?
I started
The
selling.
age of persuasion.
That's what I did when I started selling off.
Good.
Look where this ended at. Check out all of that, bro. Everybody that sold lost all their money. That's gone. They taking out that. You know what it's going to do? Back down, take out the people that just bought. Because we still embarrassed. It's still being embarrassed. But yeah, consolidation, no. Patience. If you don't see it there, bro, then don't enter. It is no. You might as well just wait until you see the setup that you're looking for, and then enter and secure your bag. Even if you was swing trading, dog, this right here, if you would have waited to this engulfed, that still right there was a good little 40 pips. Could have secured the bag, got out. But honestly, I found it's better to wait. I used to do a lot of impulsive trading. And when I'm saying that, that means, oh, I see a move, I'm finna jump in. And literally, bro, like 10, 15 minutes later, the trading pulled the opposite direction. and took my cash. And you know what it did right after that? Went the direction that I thought it was gonna go in the first place.
Yep. Hey, that's happened to me.
That can happen to me.
Yes, sir.
AJ, you muted right now, bro. I see you talking, but you muted.
Nah, I was just like every time, bro. It's gonna do that every time. You gotta wait for a
Dog.
retest.
Man, yep. Yeah, that's what I'll wait on. Even right here. See, this actually might come all the way back up to your 70 area before it shoots back down. Yep. You still have this high over here. And this is in bullish as well. But yeah, man, just honestly, just wait. That's probably the best advice I can give you. Actually, one thing I had learned today, and that was just all of a sudden, and it really stuck with me. I went ahead and watched John Dollery's trading, and bro said he ran up a $3.2 million account. And with him being impatient, he blew $2 million in a day.
Jesus.
You know what his worth of that? 4 words.
Don't talk to me for the whole day.
4 words. Patience, discipline, commitment, and organization. Those 4 words right there, dog. I'm telling you, I've been training for 5 months. I'd have made probably a little over 16K.
Okay.
And those 4 words, bro, just changed my whole mindset about trading. Honestly, if I would have had that coming in, if I would just, those 4 words, bro, if I would have had that coming in, I probably would have ran up about 30, 40 bands by now. Just being real.
Say that again. The 4 words.
Say that, yeah.
Patience, discipline, organization, and commitment. Patience, number 1. That's something I did not have first coming in the trade. I didn't have no type of patience. Ask AJ. I used to hit AJ up, hey bro, you see this trade right here? You finna enter in? When you finna enter in? Like, I had no patience, bro. It was just, I was so money hungry that it was like, oh man, I see this, I'm finna get it. And get
Can I
in,
interject?
money getting, trade go the same. What's up, G?
Can I interject real quick?
Go ahead.
I bet. So what that means for me is like, just because you guys are on the charts analyzing, that doesn't mean that you have to pull the trigger. So if you don't see your ideal setup, you don't have to trade.
Okay.
That used to mess me up when I first started trading. Like, I'm on the charts, so I gotta pull the trigger on something. No,
Yeah.
you don't. Your first job should be to protect your capital before you make any money. Your first job is to protect your bread. Right? You put your bread in there, the bread that you work for, and you want to invest it. So the first job before you even make money, rule number 1, protect your money. Rule number 2 is make money. But rule number 1 is protect your money. That's it. That's all I got to say. Go ahead, do your thing, Lando.
That's 100, bro. That is 100. Yeah, man. One thing Miller told me, you do not have to take every trade, man. You'll be amazed at how many trades I've seen on, oh man, I could have made money off that, or I could have made money off this. And it's like, you got to remember, bro, the markets is going to be there. For your one setup, there's going to be 10 more setups within that hour. For your 10 setups, there's going to be 100 more within that day. So don't ever feel like, oh, I missed that. I know some of y'all have seen when I marked up a chart and put in the chat like, bro, I missed this sale, or I missed this buy, and it went for like 200-300 pips. And like, God, man, I was like, bro, why you tripping? It's gonna be there. For that sale, there's gonna be a buy. For that buy, there's gonna be a sale. And I kid you not, caught 150 pips right on back up on the buy.
Heck yeah.
So yeah, you don't gotta take every trade, man. And the way to minimize your losses is to take less trades. I used to get in, probably trade 4 days a week. And within those 4 days, I probably then took like 25, 30 trades and only won like 15 of them. And I'm like, bro, why am I losing? Like, why am I losing 50% of my trades? And it was like, bro, you taking more than what you should. Once I scaled my trades down to maybe 5 trades a week and got better entries, well, I can make 500 in a day, chill, look for the next day's setup, because that's 500. That's 500 more than what I didn't have. Once you get greedy and be like, oh, I made 500. Let me go make another 500. That's when you start losing. That's that gambler's mindset. And I had to break myself of that. Like, really, I would be up $400. Like, oh man, let me go and hop back in here and make another 400. Oh,
Yeah.
well, there goes $200 out the door. So it's like, bro, secure your bag. You got to remember, regardless of what you're coming in here with, if you come in here with $10 or you coming in here with $500, profit is profit. That's more than what you had coming in anyway. Meaning, me saying that, meaning if you came in with $500 and you made $100, well, guess what? You up $100. That's $100 more than what you had coming in. What's the point of getting greedy and hopping right back in? Especially if you don't even see the setup there. You still got $100 more than what you had. Same thing goes with smaller money. If you had $20 and you made $150 in that day, let's just say it took you 6 hours to make that $150. Well, bro, that's $130 profit off of you coming in with $20. That's not you doing no hard labor. That's not you putting extra money in. That's money how I see it. And don't take this quote too harshly. That's money that I robbed from the banks because that wasn't my money. I came in with $20, but I'm up 130. No point in me jumping back in. Let me wait for the next setup. If I see it, if it happens that same day, cool. If it doesn't happen to the next day, well, guess what? I know I still got $130 profit for that day. I still secured my bag. I'm up more capital than what I already had coming in, and that's the mindset I had to obtain with going with trading. But that's that side, bro. Yeah, just consolidation is a no. Wait for that setup and wait for that move, and then move off that. And it'll keep you out of trouble, dog.
Hey, thanks, bro. Because you know what, I've been doing everything that you said you done did, bro. I ain't gonna lie to you.
Hey, we all do, bro. It's a learning curve, dog. You can't win without losing.
Yeah. So what would you recommend far as like how many trades would you recommend taking, like starting off though? Because I think I'd be over trading. I ain't gonna lie
to be real with you. If you want to be 100 with you, bro, you shouldn't be taking more than 5 trades if you haven't traded enough in your demo to where you're confident to take your trades, bro.
Okay.
That's being 100. Like that's one thing I messed up with. I learned so much so fast, and I made money so fast that I was like, who needs a demo? I'm getting bad. No, wrong mindset. If I would have been on my demo account trading and putting in trades, where I should be at now, which don't get me wrong, I'm gonna get there regardless. But where I would be at right now and where I am right now is 2 different places. I would have learned so much more and learned so much more about markets and how to enter and what's smart moves compared to impulsive moves. And it would have helped my confidence in trading a whole lot more as well. Because I know, okay, well, I'm going in, I'm seeing this, I'm seeing that. I know what I'm looking for on these live charts because I'm winning 70% of my trades on my demos. So when I get into my live charts, guess what I'm looking for? The same thing that got me those dubs. But if I'm entering in 20 trades on my live chart and just pretty much neglect, how you gonna know what not to do on your live if you didn't already do it on your demo? Meaning, if you lost a trade on your demo, guess what that's telling you when you go on your live account? Hey, bro, don't do that same thing because you already lost once. So why would I hop on my live and do the same shit I just did and got me an L? That's why I feel the demo helps. Yeah, it's not your money, but a loss is a loss, bro. Nobody likes losing. Yeah, all it's gonna do is teach you what to do and what not to do when you get to your live account. So me personally, I'm not speaking for nobody else. I feel like if you're coming in new, that demo needs to be your practice field, because you're not finna just go into a game and think you finna ball out. I mean, everybody can't be AI, so we got to talk about practice, and that's your practice field right there, bro. That demo, that's where you learn. That's where you make your mistakes at. That's how I feel. Your demo is where you make your mistakes at. That way, when you get to your live, you already learned from your mistakes, so you know what you're looking for in your live account.
Okay.
You gotta think about it, bro. Check this out. You take 20 trades a week, right, on your live account, and let's just say you only win 5 of those trades. Let's just say within those 5 trades, your profit comes out to $100, but you totally neglected your demo account. All right, so check this out. Let's just say you was trading within your demo account for that same week. You took 5 trades. You learned from your demo account what you should be doing and should be looking for in your live account. Well, guess what? Now your profit is 500 to 1,000 off of 5 trades. So you minimalize. You can't. That's how I say. You can't minimize your losses by taking more trades. You're overdoing the ratio there. You can't take more and feel like, well, I'm gonna lose less. It kind of doesn't work like that. But if you're taking less, let's just say you lose 2 of those 5 trades, bro, but you win 3 of them. Guess what? You still in the winning ratio, and you're not down $1,000, and you didn't blow a count. Yeah, you might have lost 2, but it's like, oh well, shit, I still made $400 this week. I might have lost $50, but I'm still up $350 compared to, yeah, I took 20 trades this week, man. I lost 1,000 and I only made like a couple $100. That shit don't feel good, bro. That just make you want to rethink trading. Like, is this for me? I'm just being real, because I thought that. I'm gonna be 100 with y'all. I thought that a couple of times. Like, is this for me? Because now I'm losing money. I was losing money because I wasn't trading smart. But hopefully that helped out your outlook on it. Just remember, bro, consolidation is a no-no. That's a never trade consolidation. Your money goes nowhere. It sits there and it's just waiting for somebody to take it.
Gotcha.
Any other questions, guys?
Nah, man.
AJ?
Well, thanks, bro. I appreciate you.
No problem, homie. Y'all can unmute y'all mic if y'all got a question. Everybody Gucci.
I just want to say y'all killing this call.
Man, I'm just trying to help.
Queen Ty, appreciate you.
Oh, I knew that was time. Hey, about time you follow me back on IG, man. I thought I was gonna have to fly
I was sleeping, but I got you.
Always.
Ty's another one that helped me out, dog. Like, y'all don't understand, bro. These guys and ladies that's been doing this for a while, bro. Please tap in with them. And regardless if they giving you information or if they telling you where to go for the information, bro, that shit is golden. Excuse my language, but that's just being 100. This shit is golden, because knowledge that you don't have, how you gonna get it if you're not asking where it's coming from? These guys know. These guys have been doing this for years. So if you wanna speed up your learning curve, I advise you guys to speak up and ask, hey, where can I get this info from? Or, I don't know too much about this. Who can I check out? Because they're gonna tell you. I talk to these guys every damn day. You would think we hang out in real life. I ain't met not one of them in real life yet. Don't get me wrong, some trips is coming. But,
for sure.
That's why you're where you're at, because you wasn't afraid to ask questions. That's why I told you was going to be doing trade trainings, because you tapped in. You was going to make sure you get everything you needed, and that's key. 100, and I want y'all to know, we don't push y'all off when we say things like, go to Manny's boot camp. Or if you hit me up and say, hey, Ty, can I get on one-on-one? And I say, hey, did you go through your 200 series? Hey, did you go through the boot camp? Hey, are you coming into our trade trainings? That's not because I don't want to make time for you guys. It's because I know the best way I can help you is if you have the foundation. We are not the educators. We are helpers. To be honest, we are still students. I'm still a student, which is why I'm in class right now. You know, so when you keep that in mind, you got to keep studying. You got to keep honing on your craft. You know, I was not an All-American point guard because I was nice. No, I actually didn't start playing ball till 15 years old. But when I seen that I had to put the work in, when everybody else was hanging out, nope, I went to the court. I was playing every guy I could find. I didn't even play against girls because I wanted to smash the girls. So I played with all the guys. So that's the same thing I did. You know, I harassed everybody that was in GTI every day, all day. I didn't care. I wanted to be top pips. I didn't know it was gonna be pips, but I knew I wanted to catch him. You know, so if people say, "Hey, I want to
Yeah.
scalp like you," then I say, "Go watch Oren," and you hit me 3 weeks later, and I'll be like, "Did you go watch Oren?" You'd be like, "Yeah, I went to one class." That ain't gonna cut it. I'm gonna tell y'all what I did. I went to Oren class 30 days straight, did not watch nobody else because I didn't want to learn nothing else because I knew if I could master just one, that's all I need. Because we're gonna tell you, do the same move, change your lot size as you grow. That's it. It's simple.
All you need is one.
You only need one.
All you need is
All right,
one,
I'm
bro.
Good
done.
stuff. Good stuff.
All you need is one. I appreciate that. I appreciate that insight, Ty.
Yeah,
Ty came
that's the
in.
1 minute goat.
Yeah, 100%. And Ty's living testimony, like I literally remember when Ty started coming to my trade trains a year ago, and to see where she at now is remarkable. Like it's OD. Like that is literally the definition of what hard work and dedication do. Straight up. She came to every session, like she said. She was just hungry. She was hungry for information. And she put in the chart time, and she put in the time with the Go Live educators, combined with what she was learning with the GTI education, right? So if you want this stuff, Ty living testimony, it can happen for you within 12 months. We know how we tell y'all 12 to 18 months. Get yourself 12 to 18 months. That's why. Right? Yeah, Lando, I appreciate you starting this off, bro.
Bro.
So I'm gonna kind of bounce off what you said a little bit. Everybody know A.J. trade with Alligator. I love the Alligator. So I just want to apply what Lando was saying. Like, you want to get your direction.
AJ, hold on real quick. Bro, tell me you started recording this because I definitely
Yeah, I did.
Oh,
Jazzy texted me and she reminded me because I had forgot. But it's been recording since 10:15.
Okay. I looked at the screen and I seen that you are screen sharing. And I was like, am I recording this?
Yeah. It's cool. All
right. I'm gonna pass it to you then.
All right, cool.
You can actually just get it, can it? I think.
Yeah, I can just grab it.
I bet.
I can just grab it. Hold on, I'm about to share mine. So can you guys drop a 1 in the chat if y'all can see my screen?
Yup.
Okay, cool. So yeah, like Lando was saying, like I mainly get my confirmations like when I'm trying to figure out what direction I should be trading in. I use the higher time frame. Now my sweet spot is the 4 hour. That's my sweet spot time frame because the 4 hour, the higher. I always say this: if you've been on my trade channels before, you know I tell y'all the higher the time frame, the clearer the picture. Y'all gotta understand all of these currency pairs, these candlesticks, like the price is the same no matter what time frame this is. We're working with currency pairs, so we're working with prices, right? So that's why when I say every time frame has its own structure, all of these time frames, they work together. That's why we got time frame correlation, right? With that being said, the higher the time frame, the clearer the picture. That's why you hear Lando talk about the daily and the weekly, right? So for me, like I love using the Alligator Indicator. Why? Because I'm a trend trader and the trend is my friend, and the Alligator is a trend-based indicator, right? So when I go to the 4 hour, I literally nine times out of 10, I have my watch list over to the right if y'all can see it, right? I always come to the charts and I see, okay, where is the market at right now on the 4 hour time frame based on structure and my alligator. For example, and I'm looking at AJ right now, not just because me and IJPY have the same initials, but because I'm actually looking at a trade right now. But for example, let's do a little back testing real quick. So drop a 1 in the chat if you know the rules of the alligator. All right, cool. Matter of fact, let me rewind. If this is your first time on a trade training with me, drop a 2 in the chat. I didn't ask that earlier. Nicole, Dominique. Nicole and Dominique, I need both of y'all to private message me on Telegram. I have 3 and iPhone. I need all 3 of y'all to Telegram message me. Ty, stop playing with me. I need everybody that's new to Telegram message me so I can see. I have 3 videos I got to send y'all. All right, Willie, I know this ain't your first time, but I'll send them to you though. You know what I'm saying? I need y'all to, so that'll help you guys out going forward.
I need that for the team. I need that.
All right, I'm gonna send it to you. I'm gonna send you the alligator jump though. Nicole, just go to GTI Family and type in my name, A.J. Barringer. Micah, hit me with a message. I'll shoot it to you. All right, cool. Travis, not my first time, but don't really know that. Okay, cool. That's what I'm gonna do for you. All right. The reason I love this indicator, you guys, is because it tells me personally what I shouldn't be doing. Right. So, for instance, this boxed in area right here. Well, first, let me give y'all the rules of it. So, these are the rules of alligator. You might want to write this down. Even though it's just recorded, you might still want to write this down. This green line right here is the trigger. These are my lips. Right? The lips are the most important piece of this puzzle. So with the green line, very simple. Once the green line crosses above the pink line, you should be looking for a buy. So the blue line is an added confirmation on that buy. So once it crosses above both lines, you know that you should be looking for mostly bull setups, right? Vice versa for sales. All right. So over here, like, let me circle this real quick. Like right here, once this crossed above, you'd have been looking to take AJ up, right? You've been looking to take AJ up. If I bring the candles back, you see how much price went up after it crossed above, right? So vice versa with the sales. Once the green line crosses below the pink and the blue, right? You'll be looking for mostly sales setups. All right, so the green line, it represents the lip. So all 3 lines are based on different parts of an alligator. So the green line is the lips. The pink line is the teeth. Yeah, thank you, Greg. And the blue line is the jaw. right? So once the green line is above the teeth or the pink, you should be looking for buys. Once the green line crosses below the teeth, you should be looking for mostly sales, right? So this area right here that I had originally shaded in, this area right here, I ain't got no reason to buy nothing. Now, unless you're a person who like, because even in these bullish candles on this time frame, family, like these two, like these, just a 4 hour time frame. So all of these candles are worth 4 hours, right? So unless you're a person that like to scalp, like, you know, ties the queen of scalping, right? So unless you was a person like this little bullish pullback right here, this little 1-2, these two 4 hour candles, unless you're a person that like to scalp, then I mean, you know, you can scalp and do your thing. But for the most part, your long-term outlook on this should be bearish. Straight up. Right?
Hey, can I ask you a quick question?
Yep.
You see to your to the left of that box, you see how the alligator like kind of faked out and then went right back bullish?
Yep.
What do you do in those instances?
So for me, the way I use it, so last week I talked about how I use the alligator. I use the alligator. I don't totally rely on it. I use it as my backup confirmation. Right. So in this instance, I wouldn't have, like, it crossed down below. But due to this area, like this all in here was like a uptrend, right? So we had down here, we had a minor level of resistance that was broken right here. Let me take this off real quick. We had a minor level of resistance that was broken right here, right? And we had like a double bottom, right? Bottom, boom, came up, boom, didn't break that level. So that support was respected. Then you got bullish engulfing candles being formed on the 4 hours. So you know it's about to come up, right? So now you got a higher high, then you got a little pullback. This is a higher low because this low is higher than this low. Pulls up, right? So now you in a little bit of a box, pulls up, comes down to test this area. Now let me give y'all some game on support and resistance since I'm here now. This area right here, you would think that this is a clean break of support. If this next candle would have been bearish, then yes, you have a clean break of support. But because this next candle right here is bullish, then I'm not respecting this as a break. So in my mind, even without the alligator, I'm still bullish for an uptrend. So even if I'm using the alligator, bro, I know so we got a 50 tap. Even with us using the alligator, I know I'm still looking for uptrend moves. So even if the alligator crosses below, like it did right here, it's best for you to wait for the upward pushes on the alligator because of structure.
Right. Okay.
So structure come first, right? And then you can throw your alligator on that. Now, with that being said,
hey AJ,
hold on, what's good?
What that well, man, I see the M pattern, but what then inverted head and shoulders too though?
Where at?
Go left a little bit. Left, right there. One. Go right. Middle. Go right. Boom.
Yeah. So you got like a little now the reason I wouldn't have counted that as an inverted head and shoulders because this to me ain't really a support area. It's just a big ass bearish candle. You know what I'm saying? It ain't even really like a reversal area. So I only look at support levels and resistance levels as areas where price actually stunted momentum and paused and went the other direction. This area right here was a part of a wave up.
You get the M pattern too right there.
You do.
So
you do it like boom, 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 boom. So the person, so look at this. Now, this is why I say the alligator works. The alligator works on every time frame. I don't want to confuse y'all. Like, the alligator works on every time frame. Just for me, I trust it more the higher I go. But on the 1 hour time frame, to capitalize off of what Lando brought to the table, if I put in a resistance line based off of this area right here, these 2 wicks, I would note this. If this is a high, because this is a high on this time frame, I would note this, right? Price comes over and tests this same area, and then it reverses down. Now you see, we got crosses below. Mm-hmm. You can eat on that. Like, you can eat on that, especially when they both cross below, right? So let me show y'all something. Let's box this in. That's why knowing where you are on the higher time frames is important, because the higher time frames have to make structure. So on the H4, if you knew you had a high, right? You know you had a high, you know you had a retest of a previous high. This whole level is a high area. This green box that I put from the 1 hour is this what it looks like on the 4 hour. You know price got to go down, right? So with that being said, once you get the cross below, right here at the high, you can take that down. I'm not against counter trend trading with the alligator. Money is money, right? So I know, but I always keep track of where I am in the big picture. You have to keep track of where you are on the bigger picture, right? This is what it looks like on the 30-minute. You see, you still got crosses going below, and you know you at a four hour high, right? Boom, crosses below. And once it crosses below the blue family, like once you get a cross below the blue, and something else I learned was through back testing, a lot of times, like let's say we up here, once you have a candle like this, because a lot of times this is an indicator that lags. Like price action comes first. That's why I focus on structure first. Price action comes first, and then the indicators come second. This candle right here, this bearish candle right here, once it closed below my teeth, I would have automatically gotten a sale. So that's what I learned. That's what I've been learning. Like, I'm gonna show you another example. I'm glad you asked that question, Philly, because you opened my mind up. Yeah, so even so, when you're because I've been using it more since I've been trading it. A lot of times when it's live action, the alligator it'll cross above or below the pink and not the blue yet. But a lot of times it's an indicator, it lags. A lot of times if you wait for it to cross below the blue, you still get money, but you'll lose out on pips. So what I learned was just trading it live. Once, like if you wanted to sell from up here on RJPY, if you wanted to use the 1 hour as your analysis time frame, right? You see like prices starting to, and it's testing your 1 hour orange resistance area, right? Mm-hmm. Once this bearish candle closes below my teeth, automatically sell. I'm gonna show you another example.
You can go down to the 15 and see it close a little earlier, right? Yeah,
you can. So with the alligator on the lower time frames, you're gonna get more. You're gonna get more crosses. You're gonna get more crosses. The higher the time frame, the less crosses you're gonna get, right? Like the 15-minute might cross 3-4 times, and the 4 hour still bullish or bearish because of overall structure. But like stuff like this on the 15-minute, right? This is dope. I always mark up, but I always, even when I'm using the indicator, I always mark off my levels of support and resistance. I always mark off my highs and I mark off my lows. I got to, right? Because I really want to see breaks. Like when it's a break, I know it's lit, right? But up here, I'm gonna box in an entry area. Like stuff like this on the 15-minute. This bearish candle. So this bearish candle didn't do it. This bearish candle probably pushed. So let me take this off real quick. If y'all can see my crosshairs and my mouse, this bearish candle probably pushed this green line below the pink. So you could have sold it from there. But for double confirmation, once you got a candle like this that closes below your teeth, you know it's gonna sell. So you're gonna be in profit immediately after a little pullback right here. But you're gonna be in profit. You're gonna get a little bit of drawdown right here. But you know why you knew you was lit?
Because of the higher time.
And because it broke a minor level of support right here. I'm gonna make this blue.
And it retested.
Yep, then it retested it right there. So if you would have got in after it closed below your T finally, let's say this is your entry point, 74.825. You go in profit, 5 pips, it's gonna take you up. You're gonna be in drawdown, a max of 5.5 pips after an hour, which is cool because your stop loss probably up here somewhere, right? And then after that, your alligator is still below. Like your alligator is still below. But after that, we're gonna fall into profit. And once them wings spread, y'all, like once them lips and them teeth and them jaw get to spreading like that, oh yes, we are in what I call the money. We in the money, right?
We gonna bust up in the motherfucker.
Straight up, right? So I could have held that all the way down. If I wanted to, y'all, I could have held that all the way down until it crossed back above. So from here all the way down to about here.
Oh my God.
Yeah, 57 in 18 hours and 45 minutes. I'm cool with that. I'm cool with that.
Money.
Easy money.
Easy.
Yeah, I'm talking about easy money. So the same over here, like example, even on the 15, right? Price came down, boom, higher low, higher high. This is a weird area, right? But I know down here. Hold on, you guys. Let me mark some off. Right, we had a slight support area right here. It's getting tested down here, right? But I have a lot of wicks, which signal when you see wicks like these at the bottom, this is what I call seller's exhaustion. Sellers are tired, right? So look to the left. Actually, hold on. To the right. I'm gonna mark off a slight little resistance area. This is like a minor resistance area, right? I count every reversal as a level. Because if a level gets broken, that means that something about to happen. I don't know what, but something about to happen. So what happened is I had a lot of exhaustion down here at the bottom, right? This candle right here, bullish engulfing. Well, actually, this is a bullish engulfing, but I had 2 of them back to back. This pushed this over that. All right. This push your alligator up, cross it above the pink, probably above the blue too, because it was a big bullish candle. So you could have entered on this candle or this candle because this one closed above your teeth. Once it closes above the teeth, family, like get the money. Quick 20s. Can we get 30? Can we get 28? 28.6, 3 hours. Right now, the thing about this is why structure is so important. Like this level of resistance got broke. Right. So we got a higher high, higher low. I wouldn't even sold it. If you're looking at 15-minute structure, I wouldn't have sold it because I know if it broke a level of resistance and it made a new high on this time frame, it got to retest. Boom, came down to the 61.8. I don't use the 70.5 fib that Lando uses, but this is a 70.5 retracement. Matter of fact, hold on.
I use the 70, bro.
Use the 70?
Yeah, 70, then
Is it 70.5 or just 70?
Let me see 1 second. So I use the 100,
yeah,
88,
yeah,
88.6,
yeah.
71,
Okay,
and the 50,
okay.
and of course 0.
Look at that. That would be one of your sweet spots, right, Lando?
Oh yeah, 100. I'm buying that.
Buying that. And the thing about it is, you know you in an uptrend. So this is the way I trade it, y'all. So when I'm buying from these areas, I'm saying to myself, okay, bare minimum price has to go retest this level up here at the top. Like I just want to get the money. It's not an ego thing for me, right? So this will be my take profit. What happened? Price bounced from the 71. You got your alligator cross, right? Let's say you don't have an engulfing until right here. But based on what I just showed y'all, I'm not entering until
somebody mic echoing, bro.
Yeah, hold on. I'm about to get it right. I'm not entering until this candle. Let me let Greg back in. Why? I know my green. I know if I get a candle that closes above my teeth, my green line is going to follow suit. My green line is going to follow above my teeth and my jaw. So I will enter right here. Y'all don't be scared of drawdown. Right, boom. Get about 7 pips of drawdown, max 9. It's up after that.
Hey, AJ, do me a favor. Go down to your 5 minute in that same area.
Okay.
Yeah, 71.
Damn, I lost where I was at. Ah, damn it. Hold on. Excuse my language, y'all. Hold on. Damn, well, okay, here we go. I'm here. Yo, this is solid.
I'm looking at right now.
This it right here.
Boom. See that candle right there, that second one after that engulfing?
Right here?
One right.
This the one. This the one though.
That's the engulfing, yeah. But I wouldn't
not like if I was looking at this on the 5, this is where I would have entered that. So check it out though.
You actually got 2.
So check it out though. I don't want to confuse y'all with all my lines. But this little place of reversal, this little mini 5-minute resistance level, it got broken right here. Higher low slightly. Engulfing candle. Closed above your teeth. Green over pink and blue. Market execution. If you scalp, that's an easy 9 in 15 minutes. Price comes down, retest the same thing. You good money as long as this don't break. Long as this don't break, you good money in structure. Price can come all the way down to the same level and still be good for an uptrend. What happened? Bullish engulfing. Oh, another one. Bullish engulfing. Probably sent them boys over. Sent that green line over that pink and that blue. If you wasn't ready, if you wasn't ready for this one, then you could have got in on this one. Why? Because the blue candle closed above the teeth. And what happened? To the moon we go. I can't go further without moving my.
Hey, AJ. on my insight, well, of course, I use the HMA. But after that, resistance broke, and that next candle with bearish, I would have waited because I would have known then it's gonna come back and retest that support.
Well, I wouldn't
have the engulfing on the opposite side.
Me personally, this right here would have been the push that I needed on my alligator.
But that's on the 5 minute though.
Yeah, it's on the 5 minute, and I don't even really enter on 5 minute like that.
Yeah.
Unless I'm scalping. But yeah, man. So I say all this to say, family, like.
Well, the reason I said is because I can't remember who asked me. I don't think it was Philly. It was the second gentleman that asked me. But that's what I was talking about by a setup or multiple entry points. Just because that one on the left was missed, you see it came back and retested at support, and boom, shot on up.
Yeah. Now, I'm gonna actually give y'all a little gem. I'm gonna give y'all an insight on my mind right now. I'm actually looking to place a buy on RJPY tonight, based on the fact that I'm waiting on a retest though, but I'm looking on that based on the fact that on the 4 hour, I have a crossover. Green is now for pink. I have a sharp bullish engulfing candle that closed right here. We are now at a support area on RJPY. If I move this line from here to there, this is a level that's been tested. So what I do is I use correlation like this. Okay, I got two things that I like in terms of how I like to trade with my alligator. I got a bullish engulfing candle that closed above my teeth on the 4 hour. On the 1 hour, I come a step lower. I'm thinking, okay, where's resistance? I color code all my charts. I know orange for me is my 1 hour. Green for me is my 4 hour. On my 1 hour, price broke through and gave me a higher high. Every time frame has its own structure. Every time frame has its own structure, right? Just the higher the time frame, the more major the structure, right? So price came up here and gave me a higher high. This is now pulling back, right? So I am now trying to figure out where price is going to give me a level of support that I can now place a buy order from, because the downtrend over. The downtrend was over when this support level was broken, right? Combine that with the fact on the 4 hour, our alligator is now above the pink. And if I pull my Fibonacci out, this is right on target. So it still has room. I was talking to Lando earlier about the sweet spots of the fib. For me, the sweet spots of the fib is like between 50 and 78.6. You get a retracement in there, you Gucci boots. I mean, obviously the 38.2 can be a launch pad, but 7 times out of 10, price is gonna retrace at least 50%. It's just what it is.
Hey, so how exactly do you use that Fibonacci? Like I seen y'all putting like numbers and stuff in.
All right, so what you do is you should go over here and grab it. You go from in an uptrend, you go from low to high. So you go from the lowest price point, which would be the lowest wick. If you can see my crosshairs right down here, all the way to the top wick.
Okay.
In this move, this all is one move. This run up is one move, right? So let me give you an example. Let me give you an example that already happened. Hold on, y'all. From here to here, yeah, right there. So I take it from this high of the wick to this low. What happened? Price came up. What it tap? What did it tap? The 50.
50.
7 times out of 10, after an impulse move like this, price gonna retrace at least 50% of that every time. 7 times, not every time, 7 times out of 10. Right? Price came down, boom. Came up, tested the 50 again. Sell down, boom. Right, lower, high, boom. You knew that price was gearing up for transition up though, because it kept it maintained structure because none of these highs got broken. Like if I draw it, I'll get my Basquiat bag real quick. Hold on. Let me get my Basquiat. Oh, wait, what did I just do? Wait a minute, this is new. What I just do, y'all? My Fibonacci just got mad different. I kind of like it like that.
Control Z.
Hey, Lando.
You made it bold, bro.
All right, we're gonna keep it like that. Now we're gonna keep it like that. I kind of like that though.
That kind of sweet. Actually.
Yeah, I kind of like that. We're gonna. I ain't even mean to do that, but we're gonna keep it like that.
You can you see right there. All right, no, go back up where your color is.
Yeah.
Go over one to your right. Click on that. That's how you change.
Oh, all right. I'm gonna do it later. I'm cool with this right now. But anyway, what we had was. So remember when I'm marking up structure for y'all and I'm telling y'all downtrends are lower highs and lower lows and uptrends are higher highs and higher lows. In a downtrend, every time it's not always gonna make a lower low. If that was the case, y'all know trading would be the easiest in the world. Like that shit would be stupid easy, right? But what happened was, as long as your highs don't get broken, you're still valid for a downtrend. So that's why it looks like this. You got high, low, lower high, higher low. That doesn't automatically mean you're going up, right? Comes up to test the same high, comes down to make a lower low, lower high, equal low, right? So now you start to perk your ears up. Okay, it's bounced off this area 3-4 times. It's indecisive. Hold on, y'all. Once you seen this bullish engulfings though, that would have gave you an idea that this was getting broken or about to get broken. And what happened? That high got broken. Always gonna get a pullback.
You got a lot of exhaustion on the wicks too.
Yeah, so that could be happening. That could happen during London tonight, right? This thing should shoot on up. It's still above the alligator too. It's just curving down because of these candles. All right, the candles are gonna the alligator is gonna follow the candle price action, the price movement, right? So I'm bullish on this, but I want to see a bullish candle before I jump in on that.
You think
I got it going up to hold on. If you take your field from that
low to the high,
from zoom out a little bit. Oh, you on the hour, right? I want to make sure I'm on the same. So take your field from the highest high all the way down to that low.
Oh, I'm gonna do this then.
Yeah, 4 hour would be better. Yeah, there you go. You see it still ain't break that support to your left either. Where your 71 is.
Yeah.
That's why I feel it's gonna retrace up to before it breaks back down. Because it's also making a W pattern on your 4 hour as well. Yeah. So and another thing I was showing Orlando earlier was another reason why I'm bullish on it is because if I like scan out to the daily, that's your C to D leg actually. Exactly. So on the harmonic, let me show y'all something. Because I don't normally talk about harmonics. Kind of let the people who do harmonics stay on their lane, but don't get it twisted. Your boy do know how to draw them. So on a daily, right? I'm not the super duper harmonic like name expert, but this would be my C leg.
So this is like a potential bat pattern.
Take your fields from that X to that A real quick.
From the X to the A?
Yeah, from X to A.
I don't even got to do that, bro. It's a 59% retrace. These numbers right here are fib retracements.
Yeah, I'm sure I'm tripping.
Yeah, so
definitely.
I don't know if y'all knew. Yeah, like the Fibonacci, the harmonic scanner, y'all, is based on Fibonacci retracements and extensions. Right? So X to A ain't nothing. This B ain't nothing but a 59.591. That's a 59.1% retrace.
It's a bet.
So you pull your fib out. Y'all see how it's like right under 61? It's at 59.
As long as it don't wicket, you in that bat pattern.
So down here on the daily, this is how the last daily candle closed. Super bullish variation. Right? This is daily support. Y'all see how we breaking down time? I don't know if y'all peeping this time frame correlation. All right, cool. So we had a bullish variation on the daily. Now my alligator is bearish. Yes, I understand that. The daily is also going to take longer to catch up to price action, right? So I have a daily bullish variation, right? And I have like a 90% retrace right here. Combined with the fact that we broke structure on the 1 hour time frame, right? We broke all of these highs up. Gotta pull back. After every impulse move, you gotta pull back. Price can really pull back all the way down here if it want to. I'm still cool for option on this time frame.
Yeah, that's gonna be an optimal entry, boy.
Yeah, it would be. This would be the best entry down here. Like I'm cool if it come all the way down here, buying it back up.
That's what. Right. It's gonna be what, a 2-week trade.
Yeah. Oh, no cap. Cause honestly, if that's a real harmonic, I ain't the harmonic expert, but if that really happens, then yeah, this is like a 400 pip move if you trade on the daily.
Yeah, that's a lot.
But honestly, I don't think that's gonna happen. Nah. Like I trust structure, and this is a 50% between 50 and 61.8 move. So with the 50s, with 50% retraces, y'all, the 50s like to do this. 50s like to do this. If you get a 50, don't be surprised if it do this and then drop. That's like the 50s love to do that. Like 50% retrace, they love to give you a lower high, then give you a higher low. That's a 61.8. But 61.8s kind of do the same thing. They love to give you like a higher low, then a equal high, then a drop. But as long as price respects this, hold on, you guys. As long as price respects this bad boy, you good. This is resistance. As long as it respects resistance, you're good.
Hey, so when you marking up your chart, you always use that Fibonacci tool to like see far as like price movement, or am I looking at that the right way?
Hold on, say it one more time.
Like when you're using that Fibonacci tool, right? Mm-hmm. Is that like, how can I put it? Like, is that determining like how many I mean like the percentage wise, like how many, maybe I'm saying it wrong, like how can I put it? Like how you said, like you got the 50 and then you got like, it gives you like percentages. Is that like percentage of pips that you can potentially gain? Is that how that works?
You asking about the percentages?
Yeah.
I think he's asking if it's like an extra confirmation tool, which it kind of is.
Yeah, it's for sure your retracement levels, bro. That's what you're using. Like, see how he just pulled it up? It hit the 50, came back down. He was talking about 50% retracement. So fib is not like an actual.
Nah. So look. The fib isn't an indicator.
Yeah, that's what I was trying to think of. I couldn't get the word.
It's a tool that you can use to measure how much price is gonna pull back. So all the Fibonacci is a tool that you can use to measure counter trend.
Gotcha.
So I know that the main trend is bullish now on this time frame because we broke resistance over here. Remember how I tell y'all, break and retest. Break resistance, wait for a retest of support, buy it up. Break support, wait for a retest of resistance, sell it down. So price broke resistance, boom, you got to get a support area. The Fibonacci is dope because it's based on like the candlestick. Some dude named Fibonacci, he was cool with numbers and all that. I don't know. But these retracement areas are percentages of the move. So when you get a 61.8% retracement, that means like that's why you have 100 to 0. This is a 0 to 100% move. The counter and the percentage that it bounces on is based off of how much percentage-wise they retrace based off of the impulse move. So like this is 0 to 100. If it retraces and finds support at 50, this is half of that move. It retraced half of this move to continue up. That makes sense?
Yeah.
Cool. So if it like, that's why we got the 100 down here. If it retraces all the way down to the 100 and respects it and keeps going up, then that means price just retraced 100% of the overall move.
Just a little insider, GBP pairs are the pairs you look for those 100% retracements.
Or 88.
88 to 82,
yeah. They love the double bottom. And those 88s and 100s, they double bottoms and double tops. That's it. All right. Questions?
Yeah, this is my last question off of that. When you get down, like how you said, like you get down to the 88 retracement, then is that giving me confirmation to go into a buy then and then wait for it to bounce back?
So in this case, yeah, it will be a buy. But the way I teach, bro, if price is at the 50 right now, just tap the 50. If price gives me a bullish engulfing candle, and I'm gonna let me tell you what an engulfing candle is. Hold on, let me make sure you know what that is. An engulfing candle is a candle that engulfs a previous candle, and I'm gonna give you some examples. This right here is a bullish engulfing. This bullish candle engulfed the body of this bearish candle, not the wicks, the bodies. Right? So this is a bullish engulfing. An example of a bearish engulfing would be, I need a good one though. I want a good one to give them a good example. A bearish engulfing will be like this. Boom, bullish, bearish, engulf the body of it, send it down. Right? Like if you get a bearish engulfing, like bro, right up here, like bro, do not try to buy nothing. No time soon, please don't. You know what I'm saying? So those are engulfing candles. So over here, you see everything for the last 1, 2, 3, 4, 5 hours has been bearish. There's no reason to buy right now.
Gotcha.
But that's the bearish variation, homie.
Yeah. So what I'm looking for, since I had a break of resistance over here, I'm waiting on a pullback. Higher low coming. And I'm gonna keep it real with y'all. I wouldn't be surprised if this is the area where you get your bullish engulfing because it's damn near perfectly tapping my resistance area. This is retesting the same zone right here, right now.
Those last 4 candles have been exhausted too.
You know what I'm saying? So, you know, I always wait for candles to close to tell me the story is gonna tell me. But I expect to get a bullish candle that engulfs very, very soon. And at that moment, I'll know I'm good to get in a buy if I want to. And I know my 4-hour alligator still sitting on top of that paint right there. And I got a whole nother hour and 23 minutes before this thing closes. So I'm good with that. So y'all some flame in the chat if y'all think y'all got some value from this call tonight. Where's my
Greg, you finna trade somebody in the draft first round?
Always, brother. Somebody on a chopping block.
He beating them to the draft.
Man.
He'd have beat everybody to the draft. He was at the bubble before.
You're gonna make that draft money without being in the draft.
That's a fact. That's a fact. That's a fact. All right, man. So I hope all minds and hearts are clear. Me and Lando been going for about almost 2 hours now. This is recorded. I will drop this recording in the Trade Talk group as soon as it gets done converting. Like I said, new people, hit me up on Telegram so I can shoot y'all them videos. If y'all need anything else, hit me. It's a few people in here that I have to actually get back with and schedule a few phone calls with because they needed some help with a few different things. So yeah, I appreciate y'all jumping on with us. We love talking trade talk. I love trading. I love educating. So yeah, y'all, it's been real, man. I love you all. Catch these pips, and y'all have a good night.
Thank you as always, bro.
Already.
Thanks. I
AJ.
appreciate you both.
Already.
Bet that, man.
Y'all have a blessed night.
Good night.
Be safe out there, man. Hey, AJ, I'm gonna tap in with you, bro.
All right, bro.
Appreciate y'all.
Yep.